Morning guys, how are you? Yes, it's been a while since I did an update on Australian property prices. Yep, so how did we do? Let's have a look and hear it from the Australian media itself. So I hand you over.
House prices are falling faster than they did during the global financial crisis a decade ago. Melbourne values tumbled 2.4% in the final quarter of last year and dropped a total of 6.4% during 2018. Experts say the biggest factors are tighter lending and reduced demand.
Yep, interesting indeed. So 6.4% down. Yes, thank you, sir. We got your message. These auto plays are really annoying. Yep, 6.4% for 2018. And you've also got to take into account that many of the people were converted from interest-only mortgages to capital repayment mortgages. So there's going to be great pressure on those that levered up, had investment properties, multiple properties, some for renting out, and were highly geared. So that's your update on property. Down 6.4% in Melbourne. That's one of the most popular cosmopolitan cities in Australia. You've got to remember out Perth side where there's been a commodity collapse broadly following China's cooling. It can't be a great deal better. Anyway, the whole concept of this is that the global economies are all being synchronized. They've been, and you either see this as by accident. I see it more as a concept of design. You can't be the only healthy person in the leper colony. You've all got to become lepers together. You can't be the only gay who isn't HIV positive in your little gay community. You've got to take the disease, and this is how the cure comes about. We have to have a global solution, which is all part of everybody first has to have a global disease. And of course Australia, it's important to mention, didn't dip as hard in 2008 because they had the benefit of the Chinese reheating the economy post 2009 and being the consumer of everything while the entire West fell over, only for themselves to be exhausted with debt levels now approaching everybody else. So everyone's taken a turn to ensure they inhale the sickness, they inject the virus, and they assure themselves the leprosy, so that they can all fall together. The key aspect about this is that when people talk about dollar failure, I often ask against what? I think they will all fail against gold, but dollar fails against a failing pound, against a failing euro, against a failing yuan that is largely pegged to it. How can a dollar go to naught next to something else that may need to go to naught as well? It's a relative value assessment of one leper versus another. In essence, they can maintain a normal relationship. They're just both falling like parachutists from the plane, where the plane represents gold and maintains true altitude, and all the others are parachutists that have varying periods where one might slip a little relative to the other, but they're all heading for the ground, thereby maintaining a currency valuation between themselves, but the zeros on the end keep getting larger. All major fiat systems, all debt-based systems will fail, and in the meantime they will hypervaluate assets and then crash, shake everyone out, get the goyim off the land. You will become tenants in your own property in time once the banks are shaken up and collapse, and you'll be bailing them. So that's your Australian property update. And if you want to find out more about the Reset Sniper and how potentially you can trade all of this, remember to register on themarketsniper.com and attend our free webinar or our mini-series, and more importantly, consider becoming part of our community. And with that, I love you and leave you. Australian house prices are shrinking.